Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead.
LME copper. There continues to be a few key features affecting the market. The big longer term pattern is the shallow bright red July 2022 to October 23 bullish shift pitchfork, which is highlighted in bright red on my daily chart. We're right now in between the lower time below, currently at 88.34, and the middle time above, currently at 99.62. The lower time had been tested over the turn of the year and had held. We also have close to the lower time the dark blue upper trendline extension, currently 88.06 of the June to August 23 ascending triangle pattern. This had reinforced the bright red lower time and arguably is the more important, having held up prices in August 2024 and January this year. We also have the often previously highlighted congestion zones and areas. These are the oft mentioned congestion area between 93.95 to 96.06, where we are right now, or just above, and below the small congestion bands between 91.83 and between 91.83 to 92.11, and between 86.65 to 86.86. Some of these have capped the top of the market and held up prices respectively, much as they did last year. Next, we have the moving averages, notably the gold long moving average below, currently at 93.66, which had until last week acted as a market attractor. Then there's a relatively new dark blue late December 2024 to start of February this year bullish Andrews pitchfork. This hasn't really been tested, but it does show off the late December to date bullish angle of attack quite well. We're right now just underneath the overhead middle time, currently at 96.69. Topside we have a somewhat diaphanous and less well defined area of congestion between 97.51 up to 99.95, containing the bright red middle time, currently at 99.62, and a dark blue upper time, and that's currently at 99.49. Though both of these will exit this congestion area within the next few weeks, so it's worthwhile remembering that. Overall, all these actions, despite the recent move higher, have led to a mainly sideways market within a wide range of about 8,800 up to about 9,600. So what should we look for in the future? Well, I'd keep an eye on the 350% Fibonacci lines that populate the nearby vicinity below. Nearest is a little below and is the October 23 to May 24 move at 94.80. Then further down we have the July to May 23 move at 90.29, and a lot further down is the October 20 to May 23 move at 86.86. Also, keep an eye out on the market just in case pushing down through the dark blue lower time, as this would prompt me to morph the pattern I'm actually using as its main driver into a shallower bullish shift pitchfork from the quite acute bullish Andrews pitchfork for the same move. LME 3-month aluminium. Much as LME copper, there are a number of patterns here, one within another, affecting the market, though I suspect some are coming to a cusp and may soon become redundant and retired. One that falls within this category is the very large and often mentioned purple tines of the mid-December 23 to late July 24 bullish Andrews pitchfork. We're at this time sitting just above the lower time, currently at 26.66. After over the course of this year breaching or possibly breaking below the lower time a number of times, so seemingly always reverting back higher. We also have, for the same time period, a bright red, shallowy bullish shift pitchfork. And here we have seen prices start establishing themselves over the middle time, currently at 26.22, after pressuring it since at least September last year. Looking below, we have the support, quite good support actually, as seen throughout February and now March, of the mauve medium moving average, currently at 26.13, and now seemingly reinforced with the green short medium moving average, currently 26.16, which together formed a pretty shabby looking golden cross late last week, which is a lagging indicator. Additionally, prices are now penetrating, though not yet establishing themselves, over the recently formed and very shallow bear channel, which is currently 24.53 to 26.87, which is highlighted in dark blue on my daily chart. The top side had previously been breached 3 weeks ago, but it was with a sharp move higher that became a pipe top, with only the one close outside the shallow dark blue bear channel. However, this push upwards 3 weeks ago, plus the very recent push higher, seems to be more concerted action and might well indicate a new pattern development. And this one would be a bright green mid-January to date bull channel, currently 26.08 to 27.52. Now I should watch this one carefully, as overhead we have the continuing resistance of the April 2018 high at 27.18. Then the big old 50% Fibonacci line of the November 2015 to March 22 move at 27.99. This area overhead had capped prices since at least July 2022. LME 3-month lead. Key features in this market, and some of them been here for a while, all relate to a very large descending triangle, possibly moving towards being a descending wedge pattern. The key levels to watch are the purple early July 2024 to date downtrend, currently at 2010. This was a good 4-pointer and common to both patterns, but it was breached late last week, and since then we have seen the market try and exploit the breach and try and stabilize over it somewhat successfully. Looking below, there is the bright red flat neckline, currently at 1952, the August to early January head and shoulders pattern, August 2024 to January this year head and shoulders pattern. Even now, this head and shoulders pattern has not determined whether it is a head and shoulders topping pattern or a head and shoulders continuation pattern, though very recent action suggests the latter. Finally, there is the dark blue neckline extension, currently at 1910, the old July 23 to February 24 head and shoulders continuation pattern, which, though breached, has been repaired, but importantly, it is also the lower trend line to the idea of a descending wedge pattern. The most recent action has seen prices push up through various congestion over the purple downtrend and up now to challenge the gold long moving average overhead, which is currently at 20.54. Now, part of me is still not satisfied with this break higher, as the declining gold long moving average is only the first real big resistance the market has encountered on its way higher, and this may still be a false break upwards. However, I also note how prices seem right now to be stabilizing over the purple downtrend, so I feel obliged to lay out some opportunities above. Thus, the primary target X is in the 2209 area above, with a secondary, harder to reach target X1 further up in the 2320 area. Okay, so let me start quashing your hopes with my final point, and has been and still is to me the most important point of all. So at the end of December last year, we saw that 2024 had created here a very rare pattern, an annual key reversal down in LME 3-month lead. Hence, one should look at all things going forward this year should be seen in the shadow of this large longer term pattern.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.